Hi, everyone, and welcome to another interactive session on our live webinar series, Moneyfy Mantra, where we speak with industry experts on various personal finance topics to help educate our viewers on managing their personal finance more efficiently and empowering and help them build and grow their investment portfolio. My name is Harsh, and I will host the session for the day. We have a very interesting topic for the day, where we will speak about, whether investing is art or a science. While we'll conclude with something, but it's up to, the investors to decide. And to cover this topic, we have Prateek Pant, Chief Business Officer at White Oak Capital. Very warm welcome, Prateek.
Thanks, Harsh. Thank you very much, and glad to be here with the audience at Moneyfy.
Thanks, Prateek. So, just a quick background about Prateek. So, Prateek has over 25 years of experience in banking and financial services, across domestic and international market. Prior to White Oak Capital, Prateek has worked with Centum Wealth, RBS Group, Franklin Templeton, Bank of America, ABN AMRO, and some more banks. So, I think a very diverse experience, and here to help us understand whether investing is art or a science. And now, before we jump to our topic for the day, let me give you some detail on our Moneyfy app. So, Moneyfy app was launched by Tata Capital, which offers a complete suite of investment products, 100% digitally. One can start investing into mutual funds through SIPs, lump sum. We've got small cases. You can open a retirement account through NPS and apply, for all types of loans and insurance products. So it's basically a one-stop shop for your investing needs and personal finance. You can download our Moneyfy app. We have given a link to download in the description below. So please do check out. And please don't forget to subscribe to our YouTube channel to get the latest update on our all the products which the Tata Capital has to offer. So viewers, one request: if anyone has any question, they can put it on the chat window, and Pratik will review and take it towards the end of the session. So yeah, Pratik, over to you to explain us, investing, whether art or science.
So Harsh, that's the golden question we've raised to a lot of audiences. So in fact, we put this out on our social media platforms in the last week or 10 days, and have been overwhelmed with the responses. The interesting part is, right, as they say, a lot of times people talk about this even when they say, are you left brained or right brained, right? And the reality is you're a mix of the two, because that is what makes you as a person, right? And and when it comes to even investing, right, there are many aspects of investing as a science, right? And the whole investing science process is the process which goes behind it. It is when you start doing bottom up stock picking, there are different models which have been created around valuations. There have been models which have been created around stock selection, and you construct a portfolio around that. But if it was so simple, then investing would be only quantitative driven modeling, right? Runs by computers, and just put that onto your NSE terminal, and you'll start making money out of that. Our belief is, Harsh, that's why that as in everything in life, there is never or, but there is a lot and the whole a lot of people talk about the beauty of art of investing, right? And the aspects of emotional balance in being invested is what makes investing very interesting. So it is definitely both art and science. The arts part of it is driven by a lot of the behavioral aspects of investing. What do you do when markets go up, right? Are you someone who starts chasing momentum? Or what happens when you suddenly start seeing what we've seen in the last 6 months in the market, right? Do you sell off your portfolio and say, this is not for me? They talk about a very interesting fact in investing, which is the eighth wonder of the world, which is power of compounding. I'm pretty sure Harshu would be educating about this to a lot of your investors. But the longer you stay in the market, right, the power of compounding actually works for you. And that's really where the whole science and art of investing comes together to help investors navigate this entire journey. Now I'm going to run through a few models which we do, right, to mix art and science at White Oak, right? Because we, as our tagline says, the art and science of investing, and we've beautifully captured it in the models which we've created. So I have a small presentation, Harsh. If you're fine,
Sure.
I can run that for your for all our audiences.
Yeah, definitely, yes.
Yeah. So just give me a minute, Harsh, as I put that out.
Yeah, your presentation.
Yeah, great. Thanks, Harsh. So, what we have is really this whole performance first culture at White Oak Capital, and the performance, it's like a sports team, right? We've actually talked about this again, drawing corollaries of investing to actually being part of a sports team. So when you are in a sports team, right, you have the captain of a team which drives the entire team, but the team has to come together and every person contributes, right? And so is it when you are out there, you compete to win in a sports team. It's exactly the same which happens with an investment team, right? We have a captain who's the CIO, and he's got many of the people who come together, and that's the beauty of how the art of investing comes together, right? For us, the four pillars, right, of investing at White Oak are really about our people, philosophy, process, and portfolio construction. And why is it important to have a model like this, Harsh? Because at times people say that investing is simple. You can just throw dartboards out there and pick up stocks, right? But then that's not really replicable. You have to have a process, and that's where the science comes through, right? Our philosophy is, for example, buying great businesses at attractive values. Now, I'm sure you ask anyone and they'll say that's my philosophy also. But the importance then is in the execution of this philosophy. How do you really define what a great business is, right? The attributes of a great business are businesses for us which are well managed, scalable businesses delivering superior returns on capital. Giving you an example, Harsh, uh, think about some of the industries today, like auto ancillary industries, which are making IC engines. While they could be very profitable today, but the whole revolution of EVs which are coming in, will this business be there tomorrow or not? Kodak, Nokia are all classic businesses, very profitable at their point of time. But were they scalable long-term opportunities? Is something what portfolio managers had to ask when they were investing in those businesses at the height of their own scalability, right? And valuation is again an important discipline because people have valuation models based on historical values of businesses. In case of White Oak, we actually look at present value of future cash flow, right? So for example, again, there are businesses which may not be profitable today, but they are causing such disruption that we know in the next 8 to 10 years, they could be significantly profitable businesses. So you actually look at valuing future cash flows of this business and then discount them to present value, right? And that's how you can arrive at understanding whether you would want to invest in that business or not, right? We also have this whole portfolio construction, which we do, right? Which is a balanced portfolio, right? The important thing, and the whole art comes in when a lot of people take top-down bets of investing. What do I mean by that? Okay, so today there are geopolitical issues. There's a war out there which has disrupted supply chains. The prices of energy has gone up because of that. Now, can you do something about that? You really can't do anything. Can you predict when is it going to get over? It's impossible to predict something like that. Not difficult, impossible, right? So what you can only do as a portfolio manager is that you actually do bottom up stock selection and buy good businesses, attractive businesses, and at consciously try avoid market timing or things like sector rotation, or believing that you understand better than what's really happening out there, right? So, and that's really what we call balanced portfolio. So we will have companies which are cyclical in our portfolios and also companies which are counter cyclical. Both types of companies. You'll have growth companies, value companies, right? So you'll have different types of companies when you create portfolios like this. And that is where really the art and science comes together, right? You are avoiding biases which gets fed into you by a lot of people throwing a lot of information, right? And at the same time having a discipline, a scientific discipline to be invested at all points of time in a market, because that is where the eighth wonder of the world, compounding, will work for you, right? So we actually have a product which deals with this right now, Harsh. White Oak is just earlier in this week right, launched a new fund, which is the White Oak Capital Flexi Cap Fund on the mutual fund platform. And his theory is the same, right? When you start looking at all the sectors over these years, you get a very interesting story out here, right? You'll see there are sectors, for example, private banks, which were leaders in 2019, were probably the worst performing sector in 21, right? Similarly, IT services, which have been leaders in 2021, have done miserably in the first half of 22, right? So it's, in our mind, it is always going to be impossible to do that. Similarly, it's also impossible to provide to have a bet on a particular style, right? Is value going to do well? Is momentum going to do well? Is the Nifty going to do better than value or momentum? Or you will have growth through alpha, which will actually do much better, right? It's again trying to take those views on those styles can be extremely detrimental to your portfolio. And finally, which is the thing which I think a lot of people understand, is your large cap, mid cap, and small cap, right? So Harsh, when you look at the last 10 years back data, which I've given you in this particular slide of how large caps have done over a short period, on a calendar year basis versus small and mid cap, there is no there's no trend to it. 2021, right? You've seen small and mid caps had such a strong rally, but in 18 and 19, they really had fallen off the roof, right? And a lot of portfolios which were heavy on large, small and mid caps were in the red. 2022, if you see the first 6 months, actually, again, small and mid caps have underperformed significantly large cap. Now, trying to switch between these large cap, mid cap, small cap is extremely difficult, right? And for investors, they may actually incur both transaction charges as well as tax, right? Every time a switch like this is made within a equity mutual fund. And hence, in our assessment, right, what we believe, if you are in an allocation where the manager who's the investment manager, who's actually the specialist out here, can create a flexi cap portfolio, which can take a mix of styles, which can take a mix of sectors, right? And then which can take, all allocations around large, small, and mid cap. That would be ideal for an investor. There used to be this ad, right? Fill it, shut it, forget it, right? So that's really the way you would actually look in terms of having one product which will give you allocation across all these market caps. For us at White Oak Capital, the way we would look in terms of constructing a flexi cap fund, we have an investment universe of more than 600 stocks, right? Where we do strong bottom-up analysis. The same process which I spoke about of investing in great companies and defining those great companies and defining valuation model is actually used to do this level of analysis. There is a decision and sizing which is done. Now, it's important to understand, while we are, as I said, Harsh, we don't take top-down calls. So when we are buying stocks, we don't buy because they are in a particular sector or because they are in a market cap. But we do have risk budgets. So for example, right, you won't have a certain, you will not allocate more than 25% to a sector or 10% to a stock, right? Irrespective of how good the attractive this thing is. So the whole sectoral weights and market tilts, which are there, market cap tilts, will be all outcome of the stock research process which we have. What we will not try and predict are any of these macro factors like geopolitical issues, currency, interest rates, commodity price movements, right? So, and using this whole bottom-up approach is where we create this portfolio. So the benefits for our investors for a style like this is that you could invest across market caps, right? It allows you to create balanced portfolios which can outperform across different market cycles because you don't have bias to something. And at the same time, it is very, very well diversified. So for someone who wants, one type of fund into exposure into equity as an asset class, the flexi cap category tends to be the most preferred category. And that is why today, even within the mutual fund space, it is the largest category which is actually there. Now, to look in terms of this particular fund itself, we've opened it on 12th and it's open till 26th. A minimum ticket size is 500 rupees for a new investor as well as for SIPs. And we have an exit load of 1% only for 1 month, right? So investors have full flexibility in deciding what their entry and exit decisions are into a open-ended fund like this. Mr. Ramesh Mantri, who's our CIO, he'll be the fund manager for this particular fund. Of course, as per riskometer, because it's a 100% equity fund product, right? It would always get classified as very high risk, which is there. So to your question of whether it's art or science, Harsh, let's talk, for once talk about this debate, right? So the flexibility which we have in creating this type of a strategy is really the art of a flexi cap fund, while balancing, right, across market caps, balancing across styles, as well as balancing across sectors is the science which is there. A team of very solid investment professionals which have come together within Vito Capital Mutual Fund, right, will be able to provide the ideal balance of both art and science, flexibility and balancing, to create a solution for a investor who would like to come into a flexi cap, Vito Capital flexi cap fund. So I'm going to pause here, Harsh, and would be very happy to take questions which our audience would have raised today.
Yeah, I think some of the questions I've received. So Pratik, I think it was a wonderful explanation of whether it's arts or science. I think it's both. I agree. And having a flexibility is an art and balancing is a science. It's the real world example of having making it the perfect way of investing. So, to start with some of the questions, I think, first question is the investors have, this particular fund as a core investment in their portfolio, or, they should, while we've seen some corrections in the market. So, while the fund, would want to capture this as an opportunity and be, as a bottom-up stock picker, but should this be fund, a core portfolio in his, investment?
Great question, Harsh. As I said, typically what does happen when you create a portfolio, for an investor, you would invest across debt, equity, and alternatives, right? All three things which are there. Within equities, investors would tend to put allocation to large cap, mid cap, and maybe even sometimes some of the thematic funds which are there. Now, depending on the maturity of the investor, whether he's a first time investor, the size of the portfolio, and your investment goals which are there, right? These answers could actually vary. But let me classify it for different categories of investor. For someone who's coming in, right, as and wants one particular product for equity allocation, there is no better product than a flexi cap fund, which can become that core fund in an investor's portfolio, which would give you that ability to invest across market caps and across styles and across sectors, right? For someone who is constructing a portfolio, which could be a core and a satellite within, and would want to have thematic funds, this would really be part of his core allocation, Harsh, and not satellite allocation, right? Because this is the first fund you should really have on your portfolio before you go into anything, because of the diversification relatively, right? This would have a lot more a lot less volatility than some of the thematic funds or pure small and mid cap funds would have.
Correct. So, Pratik, the next question is on, whether this fund, so there are some funds in the, Indian mutual fund industry in the flexi cap space, also investing, putting a part of their investment into international equities.
Sure.
So, will this fund take any exposure, in terms of, investing into international equity? And while Vito has some presence, across the globe.
Yeah, Harsh. So we are in this particular fund, Harsh, we do not plan to take any exposure to international equities, because as you rightly said, in fact, just last week, our team in Singapore, which is there, launched the first Indian mutual fund company to have its own emerging market team, and has launched a fund in the offshore market for getting exposure into emerging markets. The moment we can get requisite approvals from SEBI and RBI, we would have the same product launched in India, which can give investors in India also exposure to overseas securities. But for this fund, which is the first fund from our stable, we would want it to be pure mandate, Indian equities, flexi cap. So that's what we would want to do right now.
Okay, so, a lot of our investors approach mutual funds through the way of SIP.
Yes.
So, will this fund also allow, all the investors to take exposure through SIPs, at the start of the NFO?
Yes, Harsh. In fact, we've really upped our own ability to provide multiple options to investors for SIPs, whether it is investors want to do it weekly, fortnightly, monthly, quarterly. We also had an interesting there is an interesting variance which we have, Harsh, which I thought maybe I'll speak about. It's called goal SIP, right? So if an investor has a goal, right, for a certain period of time of investing, and then would want to withdraw after that, so that there is a retirement plan at the end of the period, you could actually start that goal SIP, which defines what the goal of the investor is, what is the time period he would want to be invested. And we would have, from time to time, we would send them reminders about that this is the goal for which they've actually invested this particular product. So, we will have all SIPs, SWPs, STPs option for investors to invest as well as withdraw at a later point of time when they've created their corpuses.
Okay, so while you covered, a part of it that, this fund will have a flexible approach of, investing. So is there any particular bias towards, large, mid or small cap? Because, some of the fund houses which are running the flexi cap show, they are more, large cap focused, rather than fully flexi cap.
So you're leaking the answer paper for me, but I'm going to give you a few clues for the investors out here in terms of how. So Whiteoak has always believed, and because we've run a group company, right, Harsh, runs the PMS and AIF strategies for last 4 years in India. We've tended to be overweight on the small and mid cap side, because what we believe is the opportunities which are there to invest and create outperformance within the small and mid cap universe is significantly more than what they are in the large cap space. And as I said, if we are a team which do not take top-down views on sectors as well as market caps, but what we are focused is on beating the benchmark, right? As I gave you the analogy of that sports team, we're not competing we're not playing the game out there. We want to compete to win, and to win you have to outperform benchmarks, and to outperform the benchmarks you have to be in the space of the market which has the ability to deliver outperformance, and which is the small and mid cap space, right? We find great opportunities in that area in sectors, right, where you actually don't have large cap companies. So when you look at sectors like specialty chemicals, textiles, where India is a world leader, and some of the world leading companies today are actually small and mid cap companies. Or you look at specialized IT services companies, right? They may be very small companies, but they are actually strong niche players in the area of AI, data, cloud computing, and have got extremely solid businesses, right? So having exposure to these type of companies help us do that. So the large cap provides balance to the portfolio, and the small and mid cap helps us to deliver outperformance on our portfolios, Harsh. So we do tend to be overweight small and mid cap without necessarily taking a top-down view on it.
Okay, so yeah, Pratik, I think, with this we come towards the end of the session today. I think it was extremely insightful, and, I think if the investors are looking out for a pure flexi cap approach of investing, I think this fund, allows one to take a pure flexi cap approach into investing. I think, I would thank you to allow us to, invite you and, give this, whole presentation on investing as an art and a science. So I would also thank all our viewers who have joined us over YouTube and various other social media platforms, to have patiently heard and interacted with their questions. So any ending comments, Pratik?
No, so Harsh, as I'd say, I would urge the investors to see their own art and science of investing as they get into it. It's a fascinating debate. There will be areas when science triumphs. There will be area when art triumphs. But as we maintain that right balance in life across different facets, what we do, maintain that same balance on investing, and you would be very successful in reaching your goals. Thank you. Thanks, Harsh. Thanks, Pratik.
Thanks, Pratik. Thanks, everyone.